So guys, I just want to take you through ISA240, the auditor's responsibility relating to fraud. I've just made a highlight there for the identification and assessment of risks, and then, hugely important, highlight these guys. All three appendix will come in use when doing questions. So let's get into the requirements, discussion with engagement team, do your risk assessment procedures, and then so these are just going to be in addition to the ones that we do in ISA 315, because these ones are specific to fraud. Okay, so discussions with management, asking them if they've identified any fraud and what was their response to having identified that fraud. Okay, then I've made a note here, evaluation of fraud risk factors, and I've just highlighted A23 to 27. If we go there, you'll see it's A23, which tells you what these fraud risk factors are. So they say, here's some examples, maybe having expectations by third parties, significant bonuses, control environment that's not effective, and then here are your specific fraud risk factors. Incentives or pressures, opportunities or rationalization. Then we have to go and look at the risks at the two levels, financial statement and assertion level. And then over here is where they explain that there is a risk of fraud in revenue. So guys, if you ever have to do risk assessment at the assertion level for revenue, you always put down that there is a fraud risk with regards to revenue recognition, even if there is no indicator in the question that there is a fraud risk. It is a standard risk that you will get because it comes from ISA 240. Okay, A28 to 30 I've highlighted, which then explains to you it's the premature revenue recognition. And there's an additional risk if they have cash sales, because they can steal the cash. And if they steal the cash, they won't then record the revenue. So revenue is understated, and so is banking cash. Okay, and then makes a note here, treats any fraud risk as a significant risk, but we already know in 315 it says fraud is a significant risk. Then we have to respond. So we first have to respond at a financial statement level, assigning more supervised staff, looking at accounting policies, incorporating the elements of unpredictability, and then A33 to 36, increase professional skepticism, and it gives you examples of how you can do so. More staff, maybe getting experts if you are able to, and unpredictability in the types of procedures, when you're going to do them, and your selection samples and locations. At the assertion level, I need to now look at the nature, timing, and extent of my audit procedures. A37 to 40 tells me what. So, in terms of my nature of audit procedures, you want to give more detail. So look here, more physical observation or inspection. Okay, we may want to use CATs here. We may want to get external confirmations, making sure that they are not invoicing before delivery for revenue. So what I can see from this is that it's more detailed. So substantive approach. My timing of substantive procedures, if you haven't actually now concluded that you're choosing a substantive approach, you can see it over here, doing it more at year end. In contrast, it does, however, say that because it's intentional misstatements, they may have initiated at an interim period, so you may actually want to come through earlier to pick it up. But our initial instinct is to come through at year end. Extent, increasing our sample sizes. Okay, and potentially using more computer-assisted audit techniques. Further to that, it says just evaluate the reasonableness of estimates and assumptions. because there could be a big concern with regards to them. Okay, then, additional responses. Test the appropriateness of journal entries, especially at year end. Reviewing accounting estimates and looking at transactions outside the normal course of business. So those are the three I said that they give responses to, but they don't actually highlight them as risks initially. But having given responses to it means surely they should be highlighted as risks initially. Okay, then we evaluate our audit evidence. So this is only coming through at test 4. But just so you know, we'll assess if there is fraud. Then we decide, are we able to continue or not? Okay, we may choose to continue or we can choose to withdraw. However, irrespective of what we do, we still need to get written representations from management. We still need to communicate with management. And we then still need to communicate with the regulatory enforcers, like IRBA. So let's go do this question, guys. I will give you 10 minutes here.